The interconnectedness of global and local markets. Global markets and local economies are interconnected in numerous ways. Global economic events, such as trade agreements or shifts in commodity prices, can have a direct impact on local industries and employment. For example, a change in global oil prices can influence local gas prices, affecting consumers and businesses alike. Impact of global trade on local economies. Global trade plays a major role in shaping local economies. Countries often rely on exports and imports to meet demand for goods and services. A boom in global demand for a product, such as electronics, can lead to increased local production and job creation. Conversely, a downturn in demand can lead to reduced local manufacturing and economic slowdowns. Currency fluctuations and local markets. Fluctuations in global currencies impact the cost of imports and exports. When a country's currency weakens against the dollar, for example, it becomes more expensive to import goods. This affects local businesses and consumers, as costs of raw materials or finished goods rise, potentially leading to inflation in the local economy. Global financial crises and local economic impact. Global financial crises, like the 2008 recession, have profound effects on local economies. A crisis in global markets can lead to tighter credit conditions, stock market declines, and investor uncertainty, which trickles down to local businesses, employment rates, and consumer spending. Local economies are often forced to adapt to global economic shocks. Technological advancements and local economies. Global technological advancements influence local economies by changing how businesses operate. The rise of e-commerce, for example, has transformed local retail landscapes, forcing traditional brick-and-mortar stores to adapt. Similarly, global innovations in automation or AI may lead to job shifts in local sectors, affecting employment and skills demand. Foreign investment and economic growth. Foreign investment plays a critical role in local economic development. Global companies investing in local industries bring capital, technology, and expertise, stimulating growth and job creation. However, heavy reliance on foreign investment can also expose local economies to global market fluctuations and foreign political decisions. Global commodity prices affecting local economies. Local economies that depend on specific commodities, such as oil, metals, or agricultural products, are heavily impacted by global price changes. For instance, if the global price of oil rises, local economies that rely on oil exports can experience economic booms, while those that are net importers may face higher costs and reduced consumer spending. Trade wars and protectionist policies. When countries engage in trade wars or adopt protectionist policies, local economies may suffer or benefit depending on the context. Tariffs, sanctions, or export bans can disrupt supply chains, raise costs, and reduce the availability of goods. Alternatively, protectionist policies might boost local industries by limiting foreign competition, though often at the expense of higher prices for consumers. Economic development in emerging markets. Global economic growth and capital flows can lead to the development of emerging markets. When multinational companies enter new markets, they create jobs, infrastructure, and business opportunities. However, rapid globalization can also exacerbate inequalities within local economies, benefiting some regions while leaving others behind. Environmental globalization and local economies. Global environmental issues, such as climate change or deforestation, also affect local economies. As global demand for sustainable products increases, local businesses may be forced to adapt to environmentally friendly practices. Additionally, local economies that rely on industries like agriculture or fishing may be vulnerable to the impacts of global environmental changes, affecting livelihoods and economic stability.